Hi there, good morning. You've tuned into ET Now and this is Market Cafe with me, Shel D'Souza. Along with me, I have Snehi Shah joining me this morning. A very good morning to you, Snehi. No doubt the picture was pretty bleak when you talk about the Indian markets, but are there any positive cues that we can take forward from the US markets?
Well, Cheryl, not as much positive, rather mixed. Not a worry, not a point of concern, but rather mixed action coming in from global markets as well. Let me take you through what the US markets have done in overnight trading while we were fast asleep. Now, the US stocks futures, they inched higher on Wednesday night as traders looked ahead to another inflation reading. These moves come after the major stock indices ended Wednesday's session with mixed activity. Sharp decline in the tech sector, particularly as Nvidia dropped 1.1%, pulling the S&P 500 and the Nasdaq lower, with the two benchmarks slipping 0.2% and 0.5% respectively. Now, the 30 stock Dow, on the other hand, added just 0.1%. So the only positive index among all three yesterday was the Dow. And then after hours trading, the trading platform Robinhood popped 10% after the company reported a 16% increase in assets under custody in February from the month prior. Troubled electric vehicle startup Fisker tumbled 46% on an intraday basis after the Wall Street Journal reported that the company has hired restructuring advisors to prepare for a potential bankruptcy filing. Investors are watching out for February's producer price index due Thursday morning before the bell. The metric is a measurement of the wholesale inflation, and economists polled by the Dow Jones anticipate that a headline PPI grew by 0.3% in Feb, or just 0.2% higher when excluding food and energy prices. Remember, the PPI report is the last major piece of economic data to be released prior to the Fed Reserve's upcoming policy meeting, all set for the 19th and 20th of this month. Now, today investors will also be watching for the weekly jobless claims report and retail sales. Both data releases are due before the opening bell, before Wall Street opens. So, well, Cheryl, largely this is the handover coming in from the US. But when you take a look at European markets, right, let's see what's happening with Europe. And most European markets closed higher on Wednesday following a mixed trading session as investors digested the latest US inflation report and the UK gross domestic product figures as well. Now, investors on Wednesday were monitoring the UK economic data, which showed a return to moderate growth in January. Services output recorded a growth of 0.2% and a bounce in construction output drove gains as well. When you look at individual indices, you had DAX not as flat as could be, but with a slight negative bias. FTSE up 0.3%, CAC up 0.6%, and the Pan-European Stock 600 index up 0.2% as well. So rather subdued, but Cheryl, nothing to worry about when it comes to at least the global handover that we've been seeing. But with that, take us through what's happening with oil. Lots of geopolitical factors have come to play again.
Absolutely, geopolitical factors continue to weigh actually on the financial market sentiment when it comes to oil, because oil is actually rallying in trade. If you see in the overnight trading session, you had the oil prices that saw a spike of approximately 3% or so. This took the crude oil prices to a 4-month high, and this is on back of surprise withdrawal in the US crude inventories. Also, apart from that, there was bigger than expected drop in US gasoline stocks and a potential supply disruptions after Ukrainian attacks on Russian refineries. So if you look at the way how Brent crude actually shut shop in yesterday's trade, that is overnight trading session, 2.6% higher. It was the highest level since November for the Brent crude. It surpassed the $84 to the barrel mark, while you had the NYMEX that settled around $79.72 per barrel mark. Particularly, let's talk about what happened in Russia. In Russia, the Ukraine actually struck oil refineries in a second day of heavy drone attacks, and that actually caused a fire in Rosneft refinery, biggest refinery. And you had Putin, who said that that was an attempt to disrupt his country's presidential elections that are due this week. So that is what's exactly happening in Russia, why there was a spike in the crude oil prices. While in overnight, you had Citi that has actually released a note saying that the ongoing price hikes in the crude oil prices is only going to be temporary, and that strength will only ease on when you go through the course of the year 2024. However, they're seeing a downside for Brent for the year 2025. They're expecting the Brent crude to actually slip to around $60 per barrel mark level. Snehi, I believe we haven't seen for a while for sure, isn't it?
Well, Absolutely, Cheryl. So that's going to be one key metric to watch out for, and we'll see how this note pans out on the oil prices. But with that, let's also take a look at all the important cues that you need to be watching out for in today's trading session. Important data coming out of India as well. You have the wholesale price index, the WPI metric coming out today. When we talk about global data coming in from the US, you've got a whole bunch of macroeconomic indicators coming out today. The likes of OPEC monthly report, PPI figures, retail sales, as well as initial jobless claims, like I told you earlier. And shifting focus back home, let's talk about some corporate action then. JSW Energy is going to be in focus because the Orissa High Court will be hearing JSW Energy's plea to extend the deadline that they had been given to remove all their assets from the encroached forest land in Orissa. And another stock in focus will be ICICI Prudential because that will be halting the fresh subscription via the lump sum method starting today. Let's talk about what's happening in the primary markets. You've got the Gopal Namkeen IPO that will be listing on the exchanges today. So that stock is going to make its D3 debut today. And when we talk about what else is happening, you have the Popular Vehicles IPO that will be closing today, last day of subscription, and Crystal Integrated Services, that IPO will be opening today, first day to subscribe to that IPO today as well. Lock-in period will be ending for two recently listed companies, Jupiter Lifeline Hospital, 9% equity coming out of lock-in, and Capital Small Finance Bank, 4% equity coming out of lock-in as well. And let's take a look at the other events that could have some impact on the markets. Then the PM-chaired meeting will appoint election commissioners today. 2 election commissioners will be appointed today, so we'll be watching out for that. The Prime Minister of Bhutan, Shering Topge, will begin his 5-day India visit today, and NATO's Stoltenberg will be presenting the annual report for 2023. So lots of key events, Cheryl, to watch out for in today's trading session.
All right, so those are the cues to watch out for in today's trading session. But let's take a look at all the news making headlines in the global arena. And first up, sportswear giant Adidas has actually posted its first loss in over 30 years, flagging a potential decline in North American sales as retailers are actually battling high inventories. Remember, Adidas has been battling to right itself after it cut ties with Kanye West in October 2022, suspending the sales of the highly profitable Yeezy sneaker line.
Meanwhile, seems like there's more pain in store for Tesla because the company shares skid over 1% after Wells Fargo downgraded the stock to an underweight rating from an earlier equal weight. Analysts call Tesla a growth company with no growth. Wells Fargo says Tesla ain't looking so magnificent at the moment, with shares down as much as 28.5% on the year-to-date basis compared to the S&P 500 that's up 8.5%. The downgrade comes as analysts see downside risk to volume as price cuts are having a diminishing impact.
All right, that was all for the global headlines then. Let's shift back home. And back home, you have big boy Reliance Industries that will be in focus yet again. Reliance will be picking up Paramount Global's 13% stake in Viacom 18. This transaction will be worth about 4,286 crore rupees. Remember, Paramount has said that it will continue to license its content to Viacom 18 after the closing of the deal. The transaction is also subject to completion of Reliance's previously announced merger with Walt Disney.
All our viewers, with that, it's time to slip into a short break on this edition of Market Cafe. But before that, we have the Sundaram Mutual Presents Wealth Creators SIP edition Nivesh Day. And today we unravel the debate between lump sum and SIP investing, providing clarity on which approach suits your investment goals.
Today on Sundaram Mutual Fund Presents Wealth Creators SIP edition Nivesh Day, we are tackling a very common query: investing in lump sum versus SIP. I am Cheryl D'Souza. Along with me, I have Shrishti Sharma. And Shrishti, very important topic, isn't it?
Well, yes, Cheryl. So let's just break it down for our viewers who might be pondering this, Cheryl. So let's start with what's the deal with lump sum investing?
Lump sum investing is like diving in with a single larger investment amount all at once.
Ah, one-time deal. But what about SIP, Cheryl?
When you talk about SIP or systematic investment plan, which we all have been hearing about, it's all about consistency. It's investing a fixed amount regularly, sort of like a financial route.
But Cheryl, so what are the benefits of lump sum investing, if you can elaborate?
Lump sum investing actually allows investors to control when they invest in the market, and they can make the best out of market corrections. The power of compounding also works on larger amounts, and actually this can be beneficial during bull markets. But listen, Shrishti, very crucial thing that everyone should know, that it's essential to note that lump sum investing also comes with bigger risk of capital erosion due to market volatility.
But Cheryl, a question there. What are some of the funds that can one invest in, if you can name some?
Well, it's best for one to actually consult their financial advisors when it comes to investing, since fund selection depends on one's financial goals, investment horizon, and also the risk appetite.
But Cheryl, and how about SIPs? Who's that ideal for?
Well, if you talk about SIPs in particular, Shrishti, it caters to anyone who's seeking a steady, disciplined approach to investing, especially people with regular income. It's like, drip feeding investments. And interesting aspect about SIP is that how they help average out investment costs over time, this enabling buyers, or rather investors, to buy more units for the same amount when the NAV is low, and also fewer units when the NAV is high. It spreads, or rather it helps spread the risk through regular fixed investments as well.
But well, viewers, it seems that each method had its pros and cons. It's about choosing what aligns best with your goals.
Yes, absolutely. But that's all for today's discussion. Stay tuned for more financial insights right here on Sundaram Mutual presents Wealth Creators SIP Edition. Nivesh.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. You're still watching ET Now. Let's take a look at how the Asian Pacific markets have opened up this morning. Well, largely range-bound this morning when you look at the entire Asia Pacific pack after Wall Street's tech-fueled rally dissipated. Now, investors will be assessing India's wholesale inflation while also monitoring any news coming out of Japan's spring wage negotiations. Now, Japan's wage negotiations wrapped up yesterday with the first overall estimate due out on Friday. Reports from local outlets have indicated that large firms offered major wage hikes. Strong wage increase could clear the way for the Bank of Japan to start unwinding its ultra-easy monetary policy, with the central bank due to meet next Monday and Tuesday. So on the back of that, let's see what Nikkei is doing. Nikkei down 0.3%, opened also in the lower down 0.4%, but continues to be around those levels as well. And this is following the reports as market price in the possibility of the Bank of Japan tightening their policy stance. With that, let's also shift focus and see what Kospi is doing, because that index climbed almost 0.4% on open. It's right there as we speak, a 12-point uptick coming in on Kospi as well. Shifting focus, let's take a look at how Australia is doing, because that started the day down marginally, continues to be around those levels. A 7-point cut coming in for the ASX 200 as well. Lastly, let's take a look at both Hang Seng and Shanghai. Hang Seng in the green, up 0.2%, and with that, let's also take a look at what Shanghai is doing. Shanghai also in the green, right along with Hang Seng, another 0.2% gain coming in for Shanghai as well. Let's talk about our market action yesterday, and we did not manage to hold on to those 22,000 levels, ending just nominally below that at 21,997, a 1.5% intraday drop on the Nifty. Yesterday we closed at 21,997, implied open showing 22,044. Not much of a positive start indicated. In fact, a rather tempered start is what is indicated for us, Cheryl, this morning. So let's see what happens.
Absolutely, Snehi, tempered start is what we should all be bracing for, and given the fact that we'd had broader markets also slipping for a third consecutive session yesterday. So let's watch out for a segment that we need to watch out for very closely, is the broader market.
Hi there, welcome back. You're still watching Market Cafe. Now, the sell-off in the market has deepened, led by a bloodbath in broader market stocks. Now, which are the top losers in mid and small caps, and are heavyweights lending any support to the Nifty? My colleague Somit is here to get us all the details of this data. Somit, hi, good morning. Take it away.
Well, if you see the yesterday's fall, that was the biggest fall that we have seen in the Nifty mid-cap and the small-cap index since Feb 2022. And so far, if you see in the month of March, the Nifty small-cap 100 index is down around 10.5%, which is the biggest monthly decline that we have seen for the index since Feb 2022. Now, when it comes to the Nifty mid-cap index, that has declined by around 5%, which is again the biggest monthly decline since June 2022 for that index. On the RSI front, if you see the Nifty small-cap 100's RSI stands at around 24, which is the lowest lowest that we have seen since December 2022, and generally RSI below 30 indicates that the index is in an oversold zone. Now when it comes to the Nifty Midcap 100, now that index RSI is at around 30, which is the lowest that we have seen since October 2023. When it comes to the key moving averages, if you see the Nifty small cap index is below its 50 and 100 DMA and is just 7% above its 200 DMA now post the fall. And when it comes to the Nifty Midcap index, that index is below its 50 DMA and just 1% above its 100 DMA and 11% above its 200 DMA. Now on a month to date basis, if you see in the Nifty Midcap index, only 9 stocks have managed to stay in the green, and if you see among them, and among the top losers, if you see, however, it's FACT, which has declined around 17%. IRFC, Dr. Lal Pathlabs, Yes Bank and Macrotech have declined in the range of around 13 to 15%. And when it comes to the Nifty small cap index, only one stock has managed to stay in green on a month-to-date basis, and that is Intellect Design. It's up around 2%, while on the top loser side, we have IFL Finance, RITES, HFCL, BLS International and JB Auto, which have declined anywhere between 21 to 35% on a month-to-date basis. Now, if you look at the S&P BSE small cap index, now we are looking at this index because this index has nearly 946 stocks as a part of this index, and out of this 946 stocks, only 27 stocks have managed to stay in green in the month of March so far, which means that around 919 stocks have declined so far in the month of March, and of that, if you see, 11 stocks have declined more than 30%, 113 stocks have declined anywhere between 20 to 29%, 479 stocks have declined anywhere between 10 to 19%, and 316 stocks have declined less than 10% so far in the month of March. Now, given this sharp fall that we have seen in the broader market, if you see the Nifty 50 performance, it's a stark contrast. The Nifty 50 has still managed to stay in green, though it's up just 0.1%, but still it's in green. But if you see the advanced decline ratio of Nifty 50, it's in favor of the laggards. Only 19 stocks have managed to stay in the green in the month of March when it comes to the benchmark index, that is Nifty 50, and 31 of them have declined so far. So it means that clearly the heavyweights have kept the Nifty afloat so far in the green. Now, if you see HDFC Bank, that has a weightage of around 11%, that stock is up around 4% so far in the month of March. Bharti Airtel, which has a weightage of 3%, is up around 4% in the month of March. ITC, which has a weightage of around 3.7%, is also up around 4%, while ICICI Bank, which has a weightage of close to 7.7%, is up around 3%. Apart from that, it's L&T, TCS and Axis Bank, which have a weightage of around 3.1 to 4.3%, and these stocks are up anywhere between 1 to 2% so far in the month of March.
For that, Somit will hang on with us and tell us, given the fact that we've seen this carnage in the broader markets, are there any scope or are there any stocks which are indicating that there could be scope of highest return potential?
Well, if you see that given the sharp fall that we have seen in the broader market so far, we have culled out this list from the Bloomberg terminal. But do remember, this is not a fresh analyst recommendation that we are giving at this moment. It is just we have calculated based on the Bloomberg consensus target price, which is an average of all the analysts covering this stock. And we have taken only those stocks that have more than 10 analyst coverage currently. Now, when it comes to the Nifty Next 50, stocks like Chola Finance, LIC, Sambardhana Motherson, Vedanta and the Abar are expected to give a return now of around 18 to 27%, anywhere between 18 to 27% over the next 12 months. When it comes to the Nifty Midcap 100, the stocks that are expected to give the highest return potential over the next 12 months include the list of Bandhan Bank, which is expected to gain around 45%, Dalmia Bharat, AU Small Finance Bank, Fortis Healthcare and Devyani are showing a return potential of anywhere between 26 to 41%. And when it comes to the Nifty Small Cap Index, it's Credit Access Grameen, PVR Inox, PNB Housing, Balrampur Chini and Manappuram Finance, which are expected to give a return of anywhere between 35 to 48%. And lastly, when it comes to the BSE Small Cap Index, there are stocks like Fusion Microfinance and Spandana Spurti, which are expected to give returns of more than 60% in the next 12 months. And then there is Gokaldas Exports, Somani Ceramics and Ujjivan Small Finance Bank, which are expected to gain anywhere between 47 to 56% over the next 12 months.
All right, Swami, thanks so much for taking us to that interesting piece of data. Let's get a move on then. And the State Bank of India has informed the Supreme Court that a total of 22,217 electoral bonds were purchased by political parties between the 1st of April 2019 and 15th February 2024. With 22,030 out of these being redeemed. This disclosure comes in compliance with the court's directive. My colleague Harish is joining in with more details on this. Harish, take it away.
Yes, in fact, after the Supreme Court ultimatum, as we know that yesterday the State Bank of India had furnished all the entire data related to the electoral bonds purchased so far, the denomination of the purchases and the beneficiary political parties. All these have been given to the Election Commission of India. This affidavit has been filed by the SBI, CMD, Dinesh Khara. This affidavit in fact says that a total number of 22,217 bonds were purchased during the period between 1/4/2019 and 15/2/2024. Total number of bonds purchased are 22,217 and total number of bonds redeemed is 22,030. And what is an interesting point is that the affidavit also says that the amount of the electoral bonds which were not encashed by the political party within the validity period of 15 days during this period have been transferred to Prime Minister's National Relief Fund as per the Gazette notification number 20 dated 2/1/2018. In fact, one thing is clear that this affidavit says, according to this affidavit, in fact, all these details will have to be uploaded by the Election Commission of India on its website by 5 p.m. on March 15 as per the Supreme Court directions. So one thing is almost clear that this will have purchase date of electoral bonds, purchases name, amount of bond, details of EB contributions received by each party, and how much each party received is in fact already in public domain. And what we will have, what we'll know is full list of those who purchased electoral bonds, date of purchase and amount, details of list of recipients, but most likely we won't know who gave which party how much. So this is essentially the biggest takeaway from the compliance affidavit filed by the State Bank of India CMD.
For that, Harish, but let's hear out what the Chief Election Commissioner Rajiv Kumar, who was actually in Jammu and Kashmir trying to take a look at the elections and the preparedness over there. He actually spoke over there. Let's hear out what he had to say about electoral bonds.
हमारा बिल्कुल कोर्ट में ये बहुत स्ट्रॉन्ग हो रहा था कि पारदर्शिता के पक्ष में है चुनाव आयोग हर तरीके से हमारे तीन ही पिलर हैं नंबर 1 डिस्क्लोजर 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 एनीथिंग वी डू इन द कमीशन and anything our district magistrates down the line in the election process do is based on two pillars disclosure disclose everything to the public to the voter.
All right, viewers, with that, we'd slip into a very short break on this edition of Market Cafe, but we'll be right back with more stock-specific news and updates, so you stay tuned.
Welcome back. You're watching Market Cafe on ET Now, and let's talk about some stocks that will be in focus in trade today. Federal Bank as well as South Indian Bank, both of them have halted the issuance of new co-branded credit cards. However, the detailed reasoning for the restriction has not been mentioned. My colleague Gaurav is here to tell us exactly what does this mean and why such a move. Gaurav, good morning and over to you.
Yes, good morning. So, Federal Bank and South Indian Bank is definitely going to be in focus because these banks are going to stop issuing the new co-branding credit cards, and this is because they are going to comply with the RBI's regulations that have come on March 7th. So they have mentioned that they are going to ensure to rectify the deficient areas before fresh issuance of any co-branding cards. So as per the March 7th notification that came from RBI, they mentioned that all co-branded card users are prominently need to display the name of the issuing bank, and at the same time they have also instructed co-branding partners not to access any kind of transaction data from the cardholders. If you look at the data from the bank, the total number of credit card has gone up almost to 99.5 million cards right now versus what it was at 70 million in January 2022. If you also look at the outstanding credit card debt, it has gone up to 2.5 lakh crores versus what it was at 1.5 lakh crores. That means we have seen a huge jump, and that is why this move has come up from RBI is what we believe. Apart from that, if you look at the co-branding segment also, that has been on a full swing for the last few years. So for example, if we have to name a few banks, ICICI Bank has a co-branded card with Amazon, and they have almost 4.7 million cards with the co-branding with Amazon, whereas they have a total number of cards of 16 million. If you look at HDFC Bank also, they have a partnership with Tata Neo and Swiggy, where they have almost more than 1 million cards, whereas the total bank's card stands at 20 million. And lastly, Axis Bank has also followed the same trend, where we have seen 3.6 million co-branded cards are issued with Flipkart, whereas they have a total number of card base of 14 million. So all in all, it seems that the co-branding trend has always been in focus, but specifically if we come back to Federal Bank, Nomura believes that 1.5% of the business for Federal Bank comes from the credit card segment, and out of which 70% of the cards are basically issued via co-branding. But if you look at the near-term impact, the NIMs are not going to get impacted, because the previous business is definitely going to be there, and they can still cater the old customers, and that is why Nomura is not expecting any kind of major impact coming up on the Federal Bank. But we will definitely keep an eye on both of these banks and see how it pans out for the shareholders.
All right, Gaurav, thanks so much for taking us through that. So both those banks will be in focus on the back of this news flow. But let's shift focus to metals now, because the seaborne iron ore prices have slumped to an 18-month low. Prices are lower by 25%. So let's take stock of this, the impact that this will cause. And my colleague Ashesha is here with the details of what this could mean, particularly for NMDC. Good morning, Ashesha. Take it away.
Well, yes, iron ore prices continue to fall. In fact, seaborne iron ore prices are down nearly 25% in the last 1 month alone, and they've now fallen to 18-month low levels below $106 per ton. So significant fall in iron ore prices is expected to impact iron ore producers the likes of GMDC, NMDC and MOIL. Now, the key reasons are, of course, weak Chinese demand, higher iron ore inventory levels and lack of cost support. These are the three primary reasons why iron ore prices continue to fall. And as I mentioned, they are down nearly 25% in the last 1 month to below $106 per ton. Now, NMDC went ahead and hiked prices by nearly 35% in the last 8 months, and NMDC's fine prices are at a 35% premium as compared to export parity. Now, higher iron ore prices helped NMDC increase its export sales by as much as 147% in 11 months of FY24, and hence it is expected to come in as a major negative. Now, Kotak Securities has come out with a very interesting report. They say that the major bulk of volume growth is perhaps behind us for NMDC. NMDC could probably go ahead and cut prices in the month of April 2024. And they also say that that surplus in the iron ore market is expected to rise in FY25. So very negative. Brokerages too are very negative on NMDC. And the fact that iron ore prices have fallen is a big negative for iron ore producers, the likes of GMDC and NMDC.
So much for that, Ashesha. We'll definitely watch out for NMDC in trade today. But with that, we come to the end of this edition of Market Cafe. It's a goodbye for Sehi, myself and the team that put the show together. But stay tuned. All the market action will continue ahead in the market.
If you like this video, then like, share and subscribe to ET Now.